This is the Recycling, Scrap Metal, Commodities, and Economic Report, March 3rd, 2025. U.S. weekly raw steel production fell to 1.66 million tons, down 3.9% from last year and down 0.8% year to date. This was on slowest U.S. manufacturing and escalating steel prices. Tariffs are already helping steel company profits with higher prices, but tariffs should shortly also help production. WTI crude oil price fell to $69.76 a barrel. Geopolitical tensions could slow demand. Also, there is increased planned Iraqi production. And possible new tariffs on Mexico, Canada, and China, on top of February's 10% China tariffs, will also slow demand. U.S. weekly crude oil production rose slightly to 13.50 million barrels per day, near the record but staying in a tight range. Drillers are concerned about falling prices, which brings less production. The U.S. weekly oil rig count rose to 489, also in a tight range for the past 18 months now. Drillers are working to maximize prices and profits by restraining drilling. Scrap steel number one HMS composite price was steady at $356.67 a gross ton. Bad weather is causing a lack of supply, so March's price could be up $20 a gross ton or a lot more. Hot rolled coil steel price soared to $45.60 per hundredweight, which is $9.12 a ton on possible new steel tariffs and scrap metal increases. Copper price rose to $4.56 a pound, but was even higher during the week as the U.S. said there may be copper tariffs coming. Aluminum price fell to $1.18 a pound, which is $26.08 a metric ton, as the U.S. may relax Russian aluminum sanctions, which would be great for the Russian economy. The largest Russian aluminum producer, Rusal, had its stock up 50% the third week of February. U.S. January disposable income, outlays, and savings rate. Disposable income rose to $22.2 trillion, but spending and outlays fell to $21.2 trillion. This was the first spending outlays decline in almost 2 years as savings jumped. Bad weather and major economic uncertainty hurt spending. The U.S. January goods trade deficit widened, as in got worse. It increased to $153.3 billion, a new record. Also, the rate of getting worse was a new record. This was as companies were trying to beat the new tariffs. Imports surged 11.9% as export rose just 2%. Deficits with China are down, but deficits with Mexico, Vietnam, and India are skyrocketing. The Atlanta Federal Reserve Q1 2025 economic growth GDP forecast fell hard to negative 1.5% from plus 2.3% in Q4 2024. This would be the first negative quarter in years. The huge goods trade deficit is part of the forecasted contraction. The U.S.'s new China February tariffs are part of higher inflation that is hurting growth. U.S. January core PCE, which is the Personal Consumption Expenditure Index. This is the Federal Reserve's preferred measure of inflation that excludes volatile food and energy. It fell to 2.6% versus last year, but rose 0.3% in January versus 0.2% in December. U.S. January new orders for manufactured durable goods made in the U.S. rose 3.1% versus December. This was the most in 6 months and above the 2% forecast. Transportation equipment and non-defense aircraft and parts jumped. Excluding defense, new orders rose a good 3.5%. Wall Street's Dow Jones Industrial Average rose a big 418 points to 43,841, with a big gain on Friday, but down for the month. February's 10% Chinese tariffs and possible new other tariffs are concerning to the market. Also, there is a recession warning that hit last week. The 10-year Treasury note fell below the 3-month note, which is called an inverted yield curve. This is Greg Brown. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.